All right, can you all hear me okay? Okay, great. So I'm going to try to go through this relatively quickly. We have a lot to talk about, so I'll try to be brief as we go through. I'm joined here also by our CFO, John Slabaugh, who's right here in the front row. Let's see if I can figure this out. There we go. So first, just the usual disclaimer. So I encourage you to read it in full on our site. We may have forward-looking statements today. So also encourage you to look at our SEC filings, our K, our Q, including the risk factors that we have in there. So first, starting from the basics, what we do. So we're a SaaS-based subscription service that provides essential and proprietary insights on policy, data, regulatory changes, and the like. And I'll walk you through exactly what that means. So first thing to understand, just as the backdrop, is the market. So this is a very large and expanding market. I think we all can see today how much the regulatory environment is changing and how impactful this is on organizations of all types. It used to be a few years ago, I used to have to explain what we do, why it matters, et cetera. But now with all the changes coming out of the US so rapidly, but also other jurisdictions around the world, you can see how complex this is and difficult to manage. Organizations of all types are getting pulled into this now. So organizations that used to not be considered regulated entities still have to deal with all of these policy developments and change. You also then, tied to that, see positions like government affairs, public affairs, et cetera, become more important within their organizations, again, as organizations realize how impactful this can be. And another trend that's in our favor is that these people and these organizations are getting increasingly comfortable with technology and AI in particular to help solve these problems. And I'll talk through a bit how we do that and why that's impactful. And then longer term also, because of that, we see an increased opportunity for the long term to be able to automate things that today are manual, specifically with regards to our customers' workflow, and that opens up huge opportunities for us. This gives you a sense for who some of our customers are. Where about half of our revenue comes from private sector, corporates, about a quarter is government entities, and a quarter trade associations and NGOs. Just to give you simple examples of why they need this and how they use us, you could take a large multinational here, say Nestle, who is probably sourcing ingredients from dozens of countries and has to deal with regulations related to, it could be sustainable farming, it could be import and export regulations, it could be food safety, all sorts of things across these multiple countries, and then they have to transport these ingredients different places, they manufacture, they ship, they probably serve pretty much every country in the world. So it's an amazing web of regulation they need to deal with. It's very hard to do it without a platform like ours and very expensive without a platform like ours. Public sector, you have government organizations that also need to understand what's happening with policy change. It could be government in the EU that wants to follow what's happening in Congress, could be vice versa. It could be federal agencies who want to track what's happening with their funding from Congress and the like. So government needs to understand what government is doing as well. And then trade associations and NGOs need to mobilize. They need to understand the issues as well, but then on top of that, they want to be able to mobilize people to help support these issues. And we help with all of those things. So this gives you a sense for who our customers are. I'll add, so we have more than 4,000 customers today, more than half the Fortune 100. And you see here samples of who the buyers of our products are. Now, to give you a little bit of a sense for how we do what we do, because it's important to understand why this is so hard to do and why we're so uniquely positioned to succeed in this market. So first of all, we collect data from tens of thousands of sources. So we start with public data sets, so policy and regulatory information coming out of all types of jurisdictions. So we collect from more than 100 countries around the world. We go down to very deep locally, so more than 16,000 districts across the United States, as an example. So we collect tens of thousands of sources. The data is public, but very hard to get to, so it's hard to find, it's hard to get, it's hard to clean, normalize, make it useful, all the things that you need to do to clean the data and actually make it useful. But we also take this data and we combine it with our own proprietary analysis and insights. So we have teams in DC and Brussels who are tracking what's happening in US and EU and provide policy analysis, political analysis, a lot of very useful and very deep information that our clients value highly, and that is proprietary to us. So as an example, we have people in DC who are in the halls of Congress every day, who may be in the room as a congressional subcommittee is marking up a draft piece of legislation. They get access to documents quickly, access to information, et cetera. So very valuable proprietary analysis that we combine with these difficult to get public data sets. So we take all this, we combine it, and then we provide overall analysis, information, and insights to our clients about what is happening in the world of legislation and regulation and what is likely to happen down the road as well. And then I'll also add, we then provide workflow tools, reporting tools, and the like that go beyond mere information and insights and get into this idea of workflow. As I mentioned, this gives you a sense for what we do with regards to the publicly available data sets. So as I mentioned, it's very hard to get to. It's multimodal. It's difficult to make it useful. And then also, as I mentioned, some of this too has to be obtained manually. So there are times where there are documents that just aren't available through a site somewhere. And that's where, again, where we have boots on the ground in DC to be able to get copies of documents quickly. That's something that's very advantageous and helpful to our clients as well. So overall then, how we differentiate. So we collect this data, we go broader, we go deeper than anyone else. So the public data that we collect, we combine it with the human provided intelligence that we offer as well. And then we do a combination of so automated tools, so our SaaS platform, and I'll talk more about the platform in just a moment, and the AI insights that we provide there. But it's this combination of the automated with the human intelligence on top of it, but also the platform on top of our ability to provide custom and curated information as well that makes us really unique in our offering. So that's about what we do, and now I'll walk through where we are as a company and where we're going. So a couple things that are really important. These are really the three areas in which we're focused right now. It's essentially profitability, it's our capital structure and free cash flow, and driving to growth. And I'll talk to you a bit about where we've been with each and where we're going, with a focus really on growth and the product work that we're doing to drive that growth. First, from a profitability standpoint, we went from being a tremendously unprofitable company, so $24.5 million loss in 2022 to positive 9.8 in 2024. So we've really transformed the way that the company operates, so positioning ourselves for long-term sustainability and success. And we've done that through really disciplined operations, making sure that we're focusing teams on the right areas, thinking about how we allocate capital within the organization, and focusing on the areas that we believe are most primed to drive long-term growth in our core. So by doing that, we've now become consistently profitable, so 7 consecutive quarters of adjusted EBITDA profitability, and we're continuing to expand our adjusted EBITDA margins. So our margins this year will be double what we were last year on a pro forma basis. So we're now profitable consistently and continuing to expand our profitability margins. Second piece comes down to our debt and free cash flow. So we've really focused on paying down our senior debt. So we've reduced our senior debt by 60% since December 31st of 2023. And we're very focused on moving beyond adjusted EBITDA profitability and getting to positive free cash flow. And so we've improved, you can see here, we've improved our free cash flow significantly over the past 2 years, so improved by $70 million. And we haven't yet given guidance on when we expect to achieve free cash flow, but I've talked about our expanded profitability, and then by paying down our senior debt, we've reduced our cash interest from about $5 million per quarter to about $2 million per quarter, so continuing to get that down. And we're being very disciplined on CapEx, which for us is software development costs, and again, consistent with our operating efficiently overall, working to maintain discipline there. And so you can start to see how we get closer and closer to free cash flow. And so we are accelerating that path to positive free cash flow. The last point here is on our growth. So that is where we are still in transition of getting ourselves back to the level of growth that we expect. We start with a strong foundation. So I mentioned our 4,000 plus customers today who are paying us to access this unique set of valuable information that we provide. The challenge we've had from a growth perspective has largely been because of the product suite. So the data sets that we offer through our legacy products have been siloed. So you go to one product for federal, a different product for state, different product for local. That creates a tremendous amount of friction in the buying cycle. It creates challenges with customer engagement, which then leads to retention challenges. It makes expansion revenue more difficult, and so on. So the focus for us has been taking this valuable information and putting it all into a single platform and having that be an AI-first, very AI-forward, modern experience, because the other challenge with siloed products is too hard to invest in any one of them, so the user experience continues to drag. So I'll walk you through what we've done there. So earlier this year, we announced the launch of PolicyNote, which is that new platform, which will house all of our data and information in one place. And as I mentioned, it's a very modern, easy to use, and AI-forward experience, which builds on our traditional strengths in AI. So we started as an AI foundation company, and so it builds on that strength, where we can now leverage the greater capabilities offered by generative AI and over time agentic AI to solve more and more complex problems for our customers in much easier ways. So PolicyNote, one way to think about it is specialized AI for this world of policy and regulation. And I'll walk through why that's really important. But here you see some examples of customer testimonials just since the launch of PolicyNote. So early indicators of very strong customer engagement and success. And you see on the left an example of our AI-powered alerts, just to give you a sense of how we're able to solve problems for our customers in more powerful ways. So in our legacy sites, AI has been more of a keyword and search-based functionality. So if you picture more complex Boolean searches and the like, look for this word within 30 words of that word, and so on and so forth. Now with our AI-powered alerts, they're much more intuitive, and we can do a very powerful job of alerting our customers to issues they wouldn't have known to flag. So an example here relates to ethanol, with the example being in the past, someone would have probably wanted alerts using keyword ethanol, so they would get flagged any bill or regulation that was proposed that had the word ethanol in it. With our AI technology, now we can alert them and say, hey, this doesn't mention ethanol, but it could have a secondary impact on ethanol producers, so you may want to know about it. And that's very important, because one of the bigger challenges our clients have, one of the concerns they have, is this fear of missing something they should know about, and this does a tremendous job of addressing that. So as I said, we launched PolicyNote earlier this year, and it will take some time to have impact, and I'll talk about how that plays into our guidance for 2025. But what's really important to understand here is we are seeing very strong indicators of what the platform can do and of the levels of success that we can have. So one example is one thing we did towards the end of Q4, before we actually publicly announced PolicyNote, was we took a cohort of dormant users, and we wanted to see, we migrated them on to PolicyNote and wanted to see what the impact of that would be. So would we be able to drive engagement just by virtue of moving them to the new platform? And the numbers that we've seen have been very strong. So 3/4 of that cohort is now what we would consider to be engaged users, and 1/3 are in our group of power users. So you'd see just by that the ability to drive much higher engagement for customers, and that, of course, will end up driving higher levels of retention, retention and expansion. And then the other thing to mention is customers are voting with their wallets. So we're seeing a much higher level of commitment to multi-years from our corporate customers than we did a year ago. So in Q1, you see 173%, so more than double the rate of multi-year contracts from our new corporate customers. So what that tells you is, number one, that this issue with policy and regulation is not something that's going away for them, right? So it's not, we happen to be in a very highly active time right now, but that's not going to change. They're expecting to need this multiple years. They're trusting us to provide it, and they believe in the platform enough to know that the platform will be the right solution for them for multiple years. So we're really pleased to see that as well. And we, of course, look very closely at a lot of usage and engagement metrics across the platform, and we're really pleased with the level of engagement we see in terms of information consumption, in terms of our customers' use of the AI tools, and so on. So why does this matter so much? This is going to be a very important driver of growth for us going forward. So you can see how, first of all, for new logo, we expect to see ACVs go up because we know that there's demand for all the data sets that we have, this need for global data, local, and everything in between. Right now, a challenge we have in the sales process is, as I mentioned, the friction of trying to sell across multiple siloed platforms. That goes away with PolicyNote, so much better ability to bundle more data sets up front. And our pricing models, I should mention, are based on number of seats, so licenses, number of seats, but also the number of data sets that you want to consume. So it'll mean higher ACVs, quicker sales cycles, so better sales productivity metrics and the like. We see the opportunity with a much more intuitive AI-forward product to do more product-led sales and product-led growth. So let prospects come in, start using the product, engage with the data, build it into their workflows, and then sell from there. So we'll see high impact on new logo there. Gross retention will improve with an improved setup, better product, higher engagement from the start, and then expansion revenue through net retention. So the ability, once we have a customer who's engaged, to introduce additional data sets, to introduce additional products and features that we can charge more for. So we'll see those higher expansion revenue over time as well. We have, in connection with this, done an excellent job of transforming, as I talked about, transforming our operations generally, but in this case, transforming our product and engineering organizations. So we brought in new leadership over the past few months. We're executing very quickly now, and we're continuing to accelerate the pace of innovation. And again, this is very important in a couple of different ways. One is to drive the customer confidence in us. So it's things like that that come back to customers committing to multi-year commitments because they see what we're doing with the product, they see the pace of information. That's how they can be confident that this is a product that will meet their needs for the long term, not just the immediate term. And again, it drives back to this opportunity that we have to continue to innovate and add new features that we can start to charge more for to drive more of that expansion revenue as we have successful customer relationships. One example I'll give you of how we've done that and how it translates commercially. So April 2nd was when President Trump announced massive sweeping tariffs that set off this high activity in the market as organizations of all types tried to figure out how those tariffs would apply to them, how they needed to navigate it, and so on. Very high stakes problem for businesses and organizations of all types. Within 2 weeks, so from April 2nd to April 16th, we had seen that customer need, built a new feature, a tariff tracker specific to this need, and launched that within PolicyNote. So that in itself, just a 2-week cycle to actually go from literally nothing to production is incredibly powerful and shows a tremendous pace of innovation. But also, again, getting back to how we're executing and how we're operating, it was tied in very closely to our go-to-market operation, We had salespeople, working on it on day of launch, and literally added $1 million in pipeline on the day of launch. So this is how we're operating now, and this is where this combination of product and platform transformation and operational transformation will come in and drive that growth. So as I mentioned, so you see our guidance here, and I mentioned that I would talk a bit about how this all ties into what we've guided to for the year. So we have total revenue of $94 to $100 million and adjusted EBITDA of $10 to $12 million. So again, continuing to expand our adjusted EBITDA margins. What we expect to see is, with the introduction of PolicyNote, acceleration of ARR in the second half of this year, and starting to then feed into GAAP revenue in 26. So this product and platform transformation is the fulcrum for our growth, but recognizing the reality that takes time to really have an impact. That's why we're looking closely at the early indicators, such as the usage engagement metrics that I mentioned, and that's why we're talking a lot about those metrics, because we're very confident in where we see this going and want to be able to convey exactly why that is. One question we often get asked is, in regards to AI, how much of a threat or opportunity are LLMs and new developments in generative and agentic AI? So I do want to take a moment to address that, because we see that as a huge opportunity for us. So I mentioned that PolicyNote is very AI forward. AI has been a part of FiscalNote's DNA from its founding more than a decade ago. So it's something where we do have a strong technical expertise and strong talent base there. There's a few things to understand about what we do and how we're different from general purpose LLMs, ChatGPT and the like. So number one is our expertise in the policy space, where we know how to run these models, we know how to do the right prompt engineering and so on, based on our expertise in this area of policy and regulation. We also, keep in mind, only run queries against our data sets, whether it's the public data sets that we collect or our proprietary analysis. So we have a high degree of accuracy in the answers that we provide to our end users, and that's incredibly important. So think for a minute about general purpose LLM, like if someone goes to OpenAI, ChatGPT, even if that LLM is running across all the same data theoretically that we have, although they can't because we have proprietary data, but even if they had all those public data sets, which they may not, they're also running against other information, right? So people's blogs about legislation, regulation, et cetera. There's higher risk of inaccuracy in those answers. And when you think for a moment about who our clients are, so again, more than half the Fortune 100, some of the largest governments in the world, they can't risk having inaccuracies in the information. So maintaining that trust that we have built with our clients is really important, and having accuracy in the AI-generated answers is critical to that. So we have an advantage there. So these are, and that's where I come back to these being purpose-built tools. Now we do leverage LLMs on the back end. So we get a benefit from that, because as capabilities in generative AI improve, as capabilities in agentic AI improve, that gives us an opportunity to better serve our customers at the end of the day. And this is where I come back to the fact that we still have a massive untapped opportunity where we can start to automate more of our customers' workflow to solve higher value problems for them, and start to tap into larger markets like legal, public affairs, and the like, in ways that we don't today. So to give you an example of what that means, right now our clients use us mostly for information and insights, along with certain workflow tools like stakeholder management and reporting and the like. But they'll get information from us, and they'll go to a law firm, a lobbying firm, and the like, and spend probably 100 times what they spend with us on some workflow that's related to information they found. We have opportunities in our platform, as AI capabilities improve, to automate a lot of that workflow for them, bring that work into our platform, drive much higher ACVs and market share for us, and bring a tremendous ROI for our customers. This gives you a sense for where we landed in Q1, and so I won't run through that in particular. And but I'll run through the key takeaways and then I'll bring it to a close. So first is, again, this reference to product-led growth with a product that for the foundation for our ARR growth in the second half of this year, and then building to greater GAAP revenue growth from there on out. Our continued operational discipline and excellence in operations, continuing to drive to positive free cash flow, and again, we have a clear path there. And our work to delever the balance sheet, continue to pay down debt, and again, just fundamentally, it comes down to increasing profitability, accelerating that path to free cash flow, and driving back to growth. And I'll stop there.